Well, it's November, and November means property tax season. And this building right here looks like the IRS. So let's go in and get some answers. What do you think? Nice building? Has to be the IRS. We steal money from people all the time. Hey, Morgan,
What?
are you the IRS?
I'm not the IRS. I'm just your friendly neighborhood title attorney, but I can answer some questions for you.
He's got it. Morgan, let's start this off. Do you pay taxes?
Unfortunately, yes.
Do you like paying taxes?
Definitely not.
All right, good start. So when we're coming to property taxes though, there's a lot of questions that we get about this time frame.
Yeah, so I think probably the most common one we're getting right now is, have the taxes been paid and who's paying them? So if you're closing really late in the year, most of the time the seller's going to pay it on the settlement statement, but then it's going to be prorated back to them based on the buyer's ownership for the rest of the year. But if you're paying earlier in the year, if you bought and you used a lender, a lot of the time that escrow account from the lender is going to catch it and pay for it for you, and they're going to pay it early to get the discount, which is awesome. But if you're paying, if you bought the house and you used cash, a lot of the time it's going to be on you to pay it because there's no escrow account.
And then to find out if your escrow is paying for it, when you get that tax bill, it will be in that like bottom paragraph
Yeah,
right
it'll
there.
say paid by mortgagee, which is the fancy legal term for lender.
So a lot of times if you're closing just a few months maybe before that tax season of November, the sellers actually might get that tax bill. So why do they get that?
Yeah, a lot of the times it'll actually follow them to their new address. Most of the time it's because the PVA or the people who are actually doing the taxes, the county clerk's office and the sheriff have not actually picked up that they've moved and that they're no longer owning that original property. So it'll actually follow them. Now, don't freak out. That seller doesn't have to pay the tax bill. It's going to be the buyer that does it. They've already paid their fair share as of closing on the seller side. So at that point, it's just kind of a courtesy to send it back to the buyer and say, hey, just want to let you know we got your tax bill for the year.
And that's where they kind of focus on that debt and credit, right? On that first page of that document that you get right when we sit down?
Yeah, every settlement statement will have a proration section. So it'll usually be the second one, at least on ours it is. And it'll say, you know, county taxes and city taxes. Sometimes there's HOAs in there as well. But basically it's all going to be prorated and everyone's going to pay their fair share based on when taxes are paid and when the property is being sold.
Can you not pay taxes?
Got to pay taxes, unfortunately. No tax fraud around here.
Well, I mean, is there like any coupons?
There's not really a coupon per se, but if you qualify, sometimes you can get a homestead exemption. So in Kentucky, there's certain criteria that you have to meet. Usually it's age or a disability. One of those two will get you. And then in Indiana, as long as it's your primary residence, you automatically get a tax break. Now, the biggest thing with both of those states is you have to actually apply for it. So if you meet the criteria in Kentucky to get that tax basically write-off or tax lowering as far as homestead's concerned, it doesn't just immediately happen. You've actually got to go apply for it.
And what is that? It's like 67?
I think it's 65.
All right, close enough. What happens if you actually don't pay your tax bill?
Yeah, if you don't pay your tax bill, it's not ideal. You want to pay your tax bill, but if you don't, there can be penalties, there can be additional fees, there can be liens. You can be foreclosed on. So there's a bunch of not so good stuff that can happen. So and it's all going to be the government that you're going to have to deal with. So not a lot of good.
But don't people just buy your tax bill and then they just own your house?
So sometimes you'll have investors that'll go and they'll buy tax bills of property. And usually there's a process that if you don't pay it at that point, then they can foreclose on it and take it. So it's the same process of foreclosure. It's just who's going to do it.
All right, so enough about property taxes. Let's talk about, what is it, income tax technically, when you're making money on those proceeds?
Yeah, some capital gains taxes.
Yeah, so you got to pay capital gains on everything, right?
No, not everything. So there are a list of exceptions that you have to meet. And if you meet those exceptions, then you actually don't have to pay capital gains. So it's if you lived in the property as a primary residence for the last 2 out of 5 years, or 2 total out of the last 5 years. If you didn't use it for business or a rental, if you have not sold another primary residence in the last 2 years, and if you're married, you get up to $500,000 of a sales price.
That's free.
Or if you're single, it's $250,000. So you have to meet all of those. As well, there's a 1031 exchange component in there, but usually if you didn't use it for a rental, you probably didn't buy with a 1031 exchange.
I am single and I will marry you if needed. All right, so I've heard about this little secret. It's called that 1031 tax exchange. What tax?
Yeah, 1031 exchange.
Yeah, something like that.
We do. We have it in-house, so we can do any kind of 1031 exchange that you want. Now, there's different kinds. Most of the time, it's a light kind. That's what most people are talking about. A lot of people think a 1031 means it's going to be tax-free. It's just tax deferred. So you're basically just kicking that capital gains down the road, but it's going to be for investment property only. So only things you're using for business or for rentals. That's it. No primary residence.
But what if I sold my business here and then I bought that beach house down in Florida?
You can do that. Yeah, you can sell property anywhere and buy property anywhere. You can go wherever you
But
want.
if it's just like my vacation home, can I still do that?
Sometimes. It depends. There's certain criteria for it, and I recommend calling an attorney right here. So that way you can actually figure out if that new beach house qualifies for your 1031 exchange.
Look at that. Go buy the beach house. I know a guy. This video has not been sponsored by Pitt and Frank, but if you are closing any real estate transactions here soon, call Pitt and Frank. Don't call Morgan, but call Cora Henderson. See ya.